Welcome back to the Tech Talks Daily Podcast, where today I'm delighted to be joined by Philip Belamant, who's going to share with me his inspirational story and the story behind Zilch and how it became the fastest growing disruptive payments platform and how its cutting edge technology is revolutionising a $45 trillion payment industry by merging the best of debit and credit cards. And it's Europe's fastest ever fintech that went from Series A to double unicorn, achieving that milestone in just 14 months and securing a $2 billion valuation. So buckle up and hold on tight, because I'm going to beam your ears all the way to London, where we are going to talk about all this and how Zilch are challenging legacy payment providers by taking the fight to the credit card industry, while also capturing one of the biggest consumer shifts. So cracking interview, this one. But enough from me. Let's get Philip onto the podcast now. So a massive warm welcome to the show. Can you tell everyone listening a little about who you are and what you do?
Neil, thanks for having me. My name is Philip Belamant, and I'm the co-founder and CEO of a company born out of the UK called Zilch. And really, the business is all around trying to create the pulse of someone's financial well-being. And to say that in words that make a bit more sense, we really are in both the credit and debit space. We're a one-stop shop for any customer to spend on either debit or credit and make savings each and every time they do that. So customers can choose to pay in full with our product anywhere they like, or they can pay in one and get deals, discounts, rewards, and cashbacks anywhere they like. Across the country, any store, online or offline. And they can do this at rates better than the market's ever seen before. And of course, for zero interest of any kind. So that is the business that we're in today.
Fantastic. And I am looking forward to learning more about Zilch and the technology that makes it all possible. But before we do that, I have a tradition on the show where I always ask my guests to share their origin story. So can I take you back in time for a moment? Can you remember where your passion for tech came from, or just a moment that would put you on this path you're on today?
Sure. So I'm from South Africa, and a lot of my love for tech really began in mobile devices, kind of the transition from the peak of Nokia through to BlackBerry, and then into obviously into the iPhone. But when I left university, I set up a mobile gaming business, and the whole concept was that people would use their prepaid airtime. So people used to go and use cash to buy airtime, and they could use this and trade it between one another through our games, and they could use that to compete in the games or buy items in the games. And ultimately, we saw people trading a lot of airtime, but no one was playing the games. And so we moved to remove the games, and we were left with what became a mobile payments company. And we were doing very interesting things like lending airtime to people who were in remote locations. Eventually that moved to electricity, water, and so on, and became very involved in financial inclusion. We worked with the World Bank, IFC, MasterCard, World Food Program, and became a big part of the solution in Africa for tens of millions of people on the continent in terms of distribution of welfare, food goods, all digitally. And that's really where my love of financial services came from. And it kind of crystallized to me that, you really can use technology to change people's lives for the better. And so that's how I got into the space. And I've been in payments and financial inclusion and technology since then, really all of my career. So for the last 25 odd years. And that's always been the space that I've loved and known really well. So Zilch is no different to that. This is ultimately a financial inclusion business. We're making sure that people who either struggle for access to credit or perhaps are sick and tired of very high cost credit want to move to a form of transacting that doesn't cost billions every year in fees and interest to credit card companies.
What a fantastic story. And that's one of the reasons I invited you on the podcast today. And it would be that path that would eventually lead you to Zilch. So can you tell me more about the story behind the company and expand on some of those problems that you set out to solve with technology?
Sure. So when we started the business, the big focus was really on what is a problem for people in the market here in the UK and across the US as well. And really, if you look at credit and you remove some of the big tickets like auto loans and home loans, but you look at sort of retail credit cards, and you understand what's going on there. These cards came to market I'm not sure if you actually know when credit cards first came about.
No, I'd love to hear more about that. It's one of those things that we all take for granted, isn't it? But probably don't know too much about the original story behind them.
Yeah, so it's actually as early as the 1950s that credit cards were born. And what's interesting is that so much in the world has changed since they arrived until today, but the cards themselves have not changed at all. The business model remains the same. And the business model, unfortunately, is a slightly ugly one. And that is that credit card companies try to find a nice balance between lending you enough so that you cannot afford to repay on time, but never go into default. That is the model. In other words, they want you to revolve at an interest rate. And so the only thing that's changed between then and now is that customers across the US and the UK have accumulated more than $1 trillion of debt on credit cards, with a T, right? A trillion. And that's revolving at around 20% interest rates. So that's $150 billion every single year that we are paying to credit card companies in fees and interest. You just think about that, right? Wow. Everyone's looking at the economy now. Where's it going to move? People are trying to help themselves, their family, their friends, not this made-up fictitious number calc interest. Yeah. And so that's really where we began. That was the problem that we identified. And the whole of Zilch was, how do we reduce that 150 billion to zero, to Zilch? And so unlike other companies where you come up with a name and then you've got a very long paragraph to staff and employees what you do, or you've got values, you've got to look them up in a book. What we decided is we'll just put the objective of the company into the name, and you put the name on the wall and everyone now knows what it means. So when you walk in the morning, we understand the goal. We must reduce this cost burden, which we see as a cancer on society. We must reduce this to zero. That is the goal. And so that's really what we set off to go and do and to try and achieve. And the real trick was, how are we going to do it? You need to price risk. You have to find some way of making money to offset the defaults that inevitably do occur. And the whole logic behind Zilch was, why don't we try and get that from marketing and advertising budgets? So why is it that no one has applied an ad model to payments? You see it in, for instance, search. Google, for instance, gave us something very useful we all use in our daily lives quite fantastically through ads. You saw the same thing with social media. Different platforms have helped us connect with friends, family, share photos, etc. And you can monetize it really well with ads. But when you look at payment, no one has done that. And that's quite bizarre, considering if you're shopping for something or you're going to transact, you really don't have to Google to TikTok to go and shop. But of course, you must pay. And so our logic was, if we can build a payments infrastructure that allowed us to inject ad revenue into each and every transaction, we could ultimately fund the cost of credit, deals, discount, and rewards to customers through the generation of ad revenue from the retailers that are selling to customers every day. And that was really the goal. How can we go and build the world's first ad subsidized payments network? That was really the objective, which we kind of calling today the Googleization of payment. So that was the objective, and that's what we've built and managed to build so far today really quickly. We're just over 3 million customers in just over 24 months using our product. It's grown phenomenally so far, which is great to see. And the credit, deals, discounts, and rewards making use of ad revenue to do that.
Wow, it's just incredible. And it's a story we don't get to hear enough about. I, for one, didn't hear about it until listening to you there. And obviously for decades, payments and commerce were split into two different industries. So can you expand on that and how brands typically spent billions reaching customers via advertising, and credit card companies would then charge consumers billions in interest and fees from those brands? Because, again, we don't think about this stuff, do we?
You have brands and retailers spending billions in advertising to get to customers. And they spend that money with the networks we all know, right? Google, Facebook, etc.
Yeah.
to try and reach you and get your attention. And then we have customers, you and I and everyone else, pulls out their credit card and ends up spending billions in interest and fees paying to credit card companies to buy those products. If you look at the market and you look at advertising, where we began, of course, was your traditional media, but of course, the attribution of the advertising wasn't very easy. In other words, you didn't know which portion of your advertising, which billboards worked, which didn't. It was just very hard to track. And so you got a lot of distribution, but you knew your 50% of your advertising was working at any given time. You just didn't know which 50%. So that's sort of where it began. And then we really moved into the world of digital, and then all of this started to change. So we started with search, and search obviously brought us a whole lot of opportunities. We knew what customers were searching for, so of course we could target adverts a lot better. We also could then track people clicking on ads and going through to make purchases a lot better in the real world with someone just looking at a billboard. We then obviously moved to the next wave, which was social. The point is, on social, we shared a lot of our lives. And that changed a number of things, but certainly it allowed advertisers to get in front of customers more specifically. So now we could go and, for instance, as a brand, you knew that you had customers that behaved similarly. You could target on social to customers that had purchased from you before. So you didn't know that they had bought socks or ties from before, but you knew that they behaved very much like a customer who does buy socks and ties from you. And so you could get in front of these customers, and that really started to drive this whole reverse bidding model, and started to have themselves actually trying to optimize your ad spend for you. That's why Facebook was so attractive when it began, because they would actually try and lower the price of your conversions on your behalf. They would target better and better and better and make use of lookalike audiences to get in front of the right people at the right time, high intent, and of course, track. And so that all became really interesting. And now we're facing a third wave. And this is really now what a lot of people are calling retail media. And this is the wave that we as Zilch are really plug in, we believe. But this wave, just to explain it, is now down to retailers realizing this one thing, and that is that they have large audiences that they know a huge amount about. They infer what you might buy with a lookalike audience. They actually know what you've bought in the past, and they also know what you're browsing for right now, right? And that's really valuable information. Finally, they have first-party data with you. This is the retailer's customer. This is not about you dropping a cookie on a website and following someone around. This is first-party data. So we know that Apple and all these browsers these days are closing off the tracking of customers. It's harder to track people from one app to another or through your browser anymore. So you really want to be focusing on communities that have first-party data. And so if you look at Amazon or Walmart, these big retailers, they realize they have all of this. And so what you might have noticed if you're shopping on Amazon these days, you might type in a TV screen or flat screen TV. And actually the top of the search results are no longer just the best matching result of product that Amazon sells. They actually are sponsored. They are selling that space now to retailers who can now target by what you've bought in the past, what exactly are you searching for right now, and what would be of the most value to you, and get in front of you at the best intent part of your journey. So the problem with Facebook and search, of course, is you might just be on there with no intent to purchase. When you're on Amazon, you're there solely to purchase. So intent is high. Targeting is fantastic now. And of course, you can convert much better than you ever used to convert. And that's where you're seeing revenues from, for instance, Amazon's ads business has now actually already surpassed their Amazon Prime revenue, right? So it's a massive space. And we just playing, this is exactly where we as Zilch squarely fit into the world. So if you think about our business, we're a payments company. So we aren't restricted by the products that, for instance, we sell, similar to, so if you look at Amazon, of course, you don't have retailers advertising on Amazon for products that Amazon don't sell. So you naturally are restricted. With Zilch, of course, you can use our product everywhere. So if you think about our business, we have first-party data. We know everything about the customer in terms of where they've shopped in the past, how often they shop. We also have affordability information on the customer. So what is the point in putting an ad for a TV screen in front of you on Amazon if you know that the customer can't afford the TV? So Zilch goes that one step further and finally integrates financial data into the targeting capability of a retailer. If I shop at Tesco every Tuesday, Zilch knows that I shop at Tesco every Tuesday. They know the exact store I go to. They know the basket size and the goods that I buy. Well, Zilch can now make that data available, that data point available for purchase from a competitor. And Co-op could now go and say, to you as a customer, they could get in front of me through the Zilch app on the Monday and say, hey, to shop at Tesco for these items tomorrow, as you always do. By the way, he has 25% discount if you buy that same basket from us and it's 50 meters down the road tomorrow. Now, that's hugely valuable for me as a customer. So the way that this has evolved, it's leaps and bounds ahead of where it used to be. Even if you look at products like Amex, who are, some of the market leaders in the space, they're still serving ads in between their payment statement or on their app when you log in with a negative mindset because you have to repay them. And they're still serving you ads about some brand you've never used and will never use. 5% off Costa Coffee. Never had it in my life, right? But what's interesting is they keep serving it to me. What we've managed to do here is find highly targeted, fantastic data points and opportunities to best serve the customer. And that's really why we think this opportunity is so massive. So I'll just finalize that, Neil, with this one thought. It's costing customers across both the UK and the US 150 billion a year in fees and interest just to pay for their credit on credit cards. But do you know what the marketing budget is set to be by 2025 across the UK and the US?
No, I wouldn't know where to start.
It's set to be around $1 trillion a year.
Wow.
And so what that means is if we are successful, if we can generate ad revenue for each and every transaction our customer makes with our product, we can fix this problem almost 5 times over. And by that, I mean, if we can take those ad dollars and completely subsidize credit, we could do it 5 times over with the marketing and sales budget in the next few years. And that's the opportunity, is this might just be the world's best possible chance of eradicating high-cost credit.
And it sounds so obvious what you're doing here. It's absolutely fantastic. And I'm surprised that it's never been, this approach has never happened before. And so the big question that I've got to ask you is, how are you able to merge these two worlds? Is there anything you can share or expand on there?
Yeah, we actually recently wrote a white paper that we published on our blog and through LinkedIn on our engine that we've created. So internally, I think I mentioned this a bit earlier, but we really call this an ad subsidized payments network. Yeah. So internally we call it Aspen, because otherwise we would waste half of our day just rattling that off to one another. So we call it Aspen. But basically what this is we've built an engine through all of the ad platforms online. So these are companies like Rakuten, Awin, Top Cashback, Quidco, companies like this that we've got partnerships with and integrations with. And what this engine does is it crawls through all of these in real time, and it finds all of the deals and discounts for brands and really helps our shoppers find and discover those and applies them in the background as our customers shop. So this is how we've managed to integrate payment. We are the issuer of the card to our customer. So we see the card transaction data in real time. We directly integrate it effectively to MasterCard network through that methodology. And at the same time, directly integrated to the heartbeat of the ad world in real time, and combining those two on the back end through this engine of ours called Aspen. And so effectively what happens is our customer comes to our app, they can see what they can spend, they can see any deals, discounts, etc. As they move to go and then shop at the store they've selected, our engine will go and find the best deal, discount, or commission payable from that brand in the background, and it applies that in real time as they effectively swipe their card, their virtual card on checkout. And so the brand is in full control. They can dial up or dial down what they're paying at any given time. And the customer, of course, is getting all of the value. If you think about it, when last did you get any value for making a payment? Normally, the value you get is the item you're buying.
Yeah.
Right? You get no other value. And so in this case, we can do up to almost 10% instant cash back in certain cases. And of course, we can do free credit, and we can do it profitably. So Chase Bank can't even get that right. And the reason is because, of course, the margin in payments is just been eroded years ago. As we know, there's no margin really in payments anymore. You have to find a different way of monetizing this. And we really believe an ad-funded model is the way to go. It's something that's never been done at scale before.
And as this is a daily tech podcast, the question I've got to ask, of course, is, can you tell me more about the technology that makes all this possible?
Sure. So as I mentioned, we have our backend engine called Aspen.
Yeah.
Ultimately, we've combined, when you look at the business at a high level, we've really combined payments, lending, and advertising all into one. And so that's kind of the three, if you had to draw it sort of, the three bubbles that overlap. And right at the heart of that is Zilch. And so you've got, on the one side, the MasterCard rails. On the other side, you have our proprietary lending. So we built our own lending platform with our own credit criteria directly into the product. But we are using partners to obviously deliver that. So we're working with some of the top CRAs. We announced some months ago our deal with Experian on something that we were building out, a proprietary way of reporting data. And so when the customer is onboarded, we do full AML, PEPs, and check if it's the state's OFAC. Of course, we do an affordability, a soft credit check, and open banking. So we're using Yapily on open banking as a platform. And effectively, we then onboard the customer, provide them a limit with our own proprietary credit score. And the customer can then obviously go on to spend. Now, when that customer spends, we use the Aspen engine to generate the ad revenue. We use the MasterCard rail to clear and settle. And effectively, we use an acquiring partner. We have two of those, Cashflows and Checkout.com, to bill the customer with a continuous payment authority on the back end. And so that's effectively our customers can repay us. So that is the stack that we're using. On the issuing side, we have a partner called Monovate, and on processing, we use GPS as well as Marqeta in the US. And on issuing, we use a Cross River Bank in the US. So that's sort of the partner stack of technologies that we're using to deliver the benefits to our customer.
And for anyone listening that is hearing about Zilch for the first time, I think I should also highlight that Zilch has become Europe's fastest ever fintech to go from Series A to double unicorn, achieving this milestone in just 14 months after raising capital at a $2 billion valuation. That's an incredible achievement, right?
Appreciate that. Yeah, look, we're really proud of that, obviously. I would say when you look at Google, Meta, and some of these companies, they profitably rode that sort of wave, that first and second wave of media to trillions, quite literally, of valuation. So, we think applying a similar model to payment certainly provides a massive opportunity. There's no doubt about it. And I think investors see that. But what we are certainly more proud of is 0 to 3 million customers in just 24 months. And utilization's off the charts. So when we started the company, a lot of people saw our installment sort of payment plan for our credit, and they kind of thought about the business a little bit like a BNPL company, these buttons on the checkout page. But what's interesting is that even the best player in that space really only sees their customers use them on average about 9 times per annum, right? Because you sort of, let's be honest, the people doing the big tickets, like for Pelotons, you buy the Peloton once, you put your clothing on top of it, and there you go. You've got your clothing horse, and there you go. You don't do that every month. So utilization isn't very high. With our product, because you can pay in full or pay in one, customers start to use our product as top of wallet. So they'll, for instance, get off the tube, they'll tap and pay in one. They'll go and buy their lunch at Pret. They might split it in 4, tap and pay in one, get the cash back. But if they want to then make a larger purchase, maybe something for 60, 80, 90 pounds, they'll open the app, switch it to pay in full, and they'll pay in full. So customers are actually using our product on average 100 times a year, but our top 25% are using us every single day. So that's 365 times a year. Now, I mean, if you think about that, Neil, that's more than apps like, some of my favorite apps like Deliveroo. Yeah. That's more than people are using Uber, Amazon. So it's pretty impressive. And that's why we have such high conviction in the plan. You have to have the utilization in order to monetize it with this ads approach. And I think that's why a lot of people in the BNPL space, the checkout buttons, most likely have either not tried or not been successful at this. They just do not have the utilization. You're not top of wallet, you're not top of mind. People don't use you habitually enough to make it attractive to a retailer to advertise. Whereas if you think about our platform, we have a retailer and we've got 5 of them today have just dialed campaigns up. If they're a little bit behind on sales for the month, they can just log onto the platform, start to dial what they're willing to pay Zilch up by 20, 30%. For instance, they could go from paying us 4% per sale to 6, 7, or 8% per sale. That will immediately give them higher visibility in our app. So they'll move from, for instance, being listed somewhere further down in the app all the way to a featured spot. They'll be woven into social. And of course, they'll go into alerts. And they can look at buying interesting data points, as I mentioned before, where they can get in front of a customer before the customer chooses to spend. And they can do all of that on a day-by-day, minute-by-minute basis. And then they can reconcile the sales against that budget for in-store sales and online sales in real time. So they could see for every pound they spend on ads right now, they're making X many pence of sales on their online website, or for instance, their store in Manchester or their store here in Victoria, and they can see that all in real time and reconcile it without changing any of their payment infrastructure at all. And that's not really ever existed before. So that really is, how we find ourselves sitting in the market today. And obviously, coming back to your point, why we think we've managed to grow so fast, even for a second forgetting valuation, but more importantly, customers and utilization.
As someone that is ambitiously on a mission to solve a universal problem with technology, I'm curious, what is it that keeps you up at night, and how do you keep your curiosity and open-mindedness alive to solve some of these problems?
I think there's probably at the moment 2 major things. So in our space, the customer really depends on us. And the regulatory landscape in our space is obviously shifting quite a bit. So, I think doing what's right by the customer is something that really keeps us up all of the time. Whatever we're doing, if we need to increase revenue, the question is, how can we do that without increasing the cost to the customer? So everything always comes to, what are we doing right by? How do we do right by the customer? And to give you an example of this, a lot of people or providers in the space, particularly BNPL, are not regulated companies. They're operating in exemptions still today in the UK. And at Zilch, we just decided that we would go and get regulated almost 2.5 years ago. We did so before we even went live. And we went through the sandbox process with the FCA. It wasn't the quick and easy route, let's put it that way. But it was the right thing to do. So regulation is really important to us, and consumer protection is really critical to us. And so we sort of, we got regulated before anyone. We've recently announced that we're doing reciprocal reporting. So obviously a big part of credit is that everyone should be reporting to a bureau and making sure others understand how this customer's performing. And a lot of people see that sometimes as a negative. It's completely the opposite. It's actually making sure that other lenders in the market act appropriately and protect customers to some degree from themselves. So, we've just done that. That's a first in the market as well. And we're excited to be announcing something very soon around how we help customers who have gotten themselves into a position, that they may be struggling to afford, because let's be frank, life happens. It surprises us all, right? So I think particularly right now in the UK, cost of living's gone up. Affordability is harder than it's ever been. Energy prices are soaring. And and life happens. So what do you do, and how do you turn up for your customer and help them when that happens? And we've just done a deal that's really exciting in that space to help customers find their way out of trouble without any interest, which is pretty phenomenal. So really doing right by the customer definitely keeps me up. We've got a lot of ambitious plans. We've got a lot of products we're looking to launch. And the question is always, what will this cost the customer, and how can someone else rather pay for it than them? So that's probably one big thing. And then I would say generally, of course, the macroeconomic situation right now is something worth us spending a bit of time worrying about. And, being a business that does, of course, run a debt book, a lending book, really that is something that we're very conscious of. So, making sure we manage that well. My previous business, we operated through 2008. We operated a very large lending company through that period, and we did a great job of it. So we appreciate and realize that now's the moment to shine. Really, this is the make or break moment, I think, for a lot of companies, particularly in this space. Massive opportunity for us to help people through this tough time and to build a phenomenal company doing it. But obviously, we've got to get up every day and we've got to make it happen. It's not going to happen on its own. So I would say right now, those are probably the two major things that are worth losing sleep over. Fundamentally trying to find a way to revolutionize affordability. How do we just get better at understanding what people can afford? That is something that, is sort of the holy grail for us in this business, and we spend a lot of time on. So I hope that answers the question, or at least gives a sense of it. But I would say those are the major items that, we probably lose sleep over tonight.
Yeah, absolutely. And the line you used there, life happens, I think that will resonate with people listening all over the world in the exact same situation. And you've already given me a few little teasers, and I appreciate there's probably very little you can share with me right now. And we will need to get you back on later in the year for some of the news around that. But what's next for Zilch? What can we expect from you in the next 12 months?
I mean, really for us, as you say, there's a number of things that we can certainly talk about, and love to come back and join you and do so, Neil. Yeah. I would say, if you look at payments as an industry, it's about 45 trillion. We're a long way off of that. We've got a lot of work to do. But just over this calendar year, as a business, we really are looking at growing revenue by, more than 100%. So we have our work cut out for us. In terms of sales, we've been doubling our sales every 6 months, really for the last 2 years. And so, these are some big objectives for us. But I would say the most critical one, and sort of the Northern Star metric we use to measure in the company, is today we've saved customers just about £100 million in interest and fees. So that's to date.
Wow.
The objective is to save customers at least that sum, if not more, in this financial year alone. And so, it kind of, again, comes to, it's never before been more important to pay 0% interest. And so really that is the Northern Star metric and objective. And you could bake that back, you could almost write that back up to total top line sales, total new customers. You could almost work it backwards, but that's really how we see things is when we launch a product or feature, how much more is that going to save a customer, and how much more money does that put back into a customer's pocket? And that's really what we're looking at as a target. And so this year needs to be more than 100 million in this year alone. And that would have been more than we've saved customers so far since we started. So that really is the objective over this period of time.
Fantastic. And I love chatting with you today. And we started the podcast talking about your origin story and what would put you on this path. And as you reflect on your career now, I'm now going to ask you, what was the most interesting or compelling story that might have happened in your career? I'm sure you've got a few war stories under your belt, but is there anything that springs to mind that you could share with us?
I think one story that's probably worth talking about, that really was the tipping point for me. So a lot of people always used to say, when you're growing up, you listen to the news and everyone's talking about technology and how technology is going to change people's lives. And that was the same always with financial inclusion, and of course then, financial technology. It can change people's lives, and I really wasn't sure. I wasn't seeing any practical application of it that was obvious to me until we started with our airtime lending product. So this is in my previous business in South Africa. What you found is that you would have people traveling vast distances on the weekends and queuing for hours, in some cases the entire day, just waiting to buy prepaid airtime for their phones or prepaid electricity, so they could go and put this into the meter at home and have electricity. And the problem is that, of course, this was not only an inconvenience and a cost, but it meant time away from family. So you would have people working in the week, all week, working really hard, typically staying away from the home, and then having to basically travel back into somewhere more urban to queue for hours on a weekend away from their family just to buy airtime or electricity before they return home again. And so the challenge was, how are we going to fix that? How do you reunite people basically with their families and save them all of this time and cost? And so the product that we came up with was a lending product. And so customers could sit at home, they could dial up via their phone, and this was old technology. It's like *120 *#, you dial, it's not even a smartphone app. And people could dial in with this technology to our system from their couch at home. It was free. And effectively what we would do is we would take a look at all their call records and spend on their phone going back 2 years. And we would lend them an amount of prepaid airtime. And eventually they could also borrow prepaid electricity. So we would just top their phone up immediately virtually with the airtime, or we would send them the voucher for their electricity. And they could obviously make use of that then in their home without leaving. And when they then traveled back in to work on the Monday, and it was convenient, they could go to the very person they would typically buy airtime or electricity from, except they would just pass them the cash, and that person effectively would collect the money for us. So that was the product that we came up with. And what was really interesting, and this was really the turning point for me, we had one of these massive CRT screens, these old school monitors in the office. We had a really huge screen. And what we did is, because we had access to all of these customers' mobile devices, we could triangulate them off of the cell phone towers. So what we used to do is we would have them and their dependents. So they would be red dots and their dependents would be green dots. And we could triangulate those. And so what you would do is you would always have a distance between the dots, which would typically show you on the weekends, these people are apart. And so there would always be, dots scattered all over the screen, but they would have a median difference of space between them to represent the fact that people are either together or apart. And we rolled the service out, and just after 1 week, we got to almost 6.5 million customers in almost a month. And what we found is we then came back into the office. We were all working hard on this thing. We came back in on the Saturday, and we sat down in front of this big CRT screen. And, sometimes they used to go a little bit off the screens. They'd get a bit broken. And so everything used to go kind of like a magenta color. And we would sit and look at all these dots, and they were all now magenta color. And we were sort of banging the side of the screen thinking, yeah, the screen's gone again. We're going to have to replace this one. And, we played with it a little bit. We were looking at numbers, but everyone was tired. It'd been a longer week. We said, we'll come in on Monday and take a look. And on Monday, we came in, sat down, switched the screen on. And of course, the colors were fine again. It was green and red. And it was only then that the penny dropped. And we realized the screen wasn't broken on the weekend. It was that for the first time, these people were together. The dots were overlapping. And so they all looked magenta. And that was the first time, I think, in my life that I truly looked and thought, wow, look at the power of technology. We've reunited people with their families. And that was really, for me, the turning point. I think that's where I fell in love truly with fintech. And certainly I can say a turning point for me, and all of the team huddled around that screen looking at it at the time just thought, wow, what an unbelievable achievement. So that's just a little story that I always like to think about and tell the team here at Zilch as well. It's always good to remember what role you're playing for people and are you truly helping them.
Wow, what an amazing story. I absolutely love it. And I can't thank you enough for joining me on the podcast today. But before I do let you go, for anyone listening, just wanting to find out a little more information about all things Zilch, how it works, how they can get involved, or even contact your team if it's a retailer, etc., what's the best starting point for everything?
Yeah, so zilch.com is obviously a great place to find all the information. Otherwise, you can find us on LinkedIn. Just type in Zilch and you'll check it out immediately. But if anyone is interested to get in touch with us on, the PR or sales side, comms, COMMS at either payzilch.com or zilch.com is a great way to reach out to us too.
Well, there's so much we covered in a short amount of time today, from the story behind Zilch, how it became a fast-growing disruptive payments platform based on cutting-edge technology, and how you're revolutionizing this $45 trillion payment industry by merging the best of debit and credit cards, but also how you're challenging legacy payment providers by taking the fight to the industry while capturing one of the biggest consumer shifts in the history of how people are paying. And I always say that technology works best when it brings people together. And I love how you're building direct relationships with customers, hosting retailers on your platform and earning commission from those retailers' marketing budget. Incredible, everything that you're doing. And not only that, for also sharing your personal origin story too. So just a big thank you for sharing that with me today.
Not a problem at all. Thanks so much for having me, Neil. We'll speak soon.
Wow, I learned so much from today's guest about the history of credit cards and how for decades, payments and commerce were split into two different industries. And traditionally, brands spent billions reaching consumers via advertising, and credit card companies would then charge consumers billions in interest and fees to buy from these brands. After hearing about how Zilch is merging these two industries, creating unprecedented value for consumers and offering free credit and value-adding debit anywhere, it's just a great example of how technology is changing the world. But over to you. Do you have any examples like this, not just in fintech, but in any industry? Maybe you or your business is trying to make positive changes in the world. Whatever it is, I'd love to hear from you. So please email me, techblogwriter@outlook.com, Twitter, LinkedIn, Instagram @NeilC.Hughes. And if you're attending any big tech events, give me a shout, because I'm going to be taking this podcast on the road in March. We're going everywhere from Utah to Vegas. So if you're going to be attending any events in those areas, give me a shout. But that's it for today. So a big thank you for listening as always. And until next time, don't be a stranger.